Hi, and welcome to Mind Over Pips. In this segment, we'll be covering you're closer to consistency than you realize. Most traders think that consistency starts when they finally have a perfect month. No losing streaks, no emotional mistakes, no bad entries, no revenge trades, just clean execution and steady profits. But that's not how consistency actually begins. Consistency starts much earlier than the numbers show. It starts in the small moments that nobody celebrates. It starts when your reactions change. It starts when you stop treating every trade like it decides your future. It starts when your mind becomes more stable, even before your account does. And that's why so many traders quit at the worst possible time. Because from the outside, it still looks messy, the equity curve is still uneven, the wins are still inconsistent, the progress is still hard to see. But on the inside, something important is changing. That shift matters more than most traders realize. In this Mind Over Pips lesson, I want to break down 9 signs that you're becoming a more consistent trader, even if your results haven't fully caught up yet. And if you recognize yourself, even in a few of these, don't dismiss them. That's progress. 1. Losses don't destroy you anymore. There's a moment every trader has to go through. At first, a loss feels personal. It feels like proof that you are not good enough. It feels like the market is against you. It feels like one bad trade can undo everything. But then something starts to change. You still don't enjoy losing, of course. No one enjoys losing. But the losses don't break your spirit anymore. It no longer ruins your entire day. It no longer sends you into a spiral of self-doubt. You take the loss, you respect it, you move on. That's a major sign of growth because now you understand something that inexperienced traders don't usually understand. Losses are a part of business. It's not a sign that you failed. It's not a sign that your strategy is broken. It's just a part of the game. And once a trader fully accepts that, they become far more harder to shake. 2, you can notice emotions before they start to take over. This one changes everything. At some point, a trader stops getting blindsided by emotions. You miss a trade, and instead of instantly chasing it, you notice the pressure building. You take a loss, and instead of firing back immediately, you feel the urge coming. You watch price run without you, and instead of forcing a revenge trade, you recognize the emotional spike. That awareness is huge because tilt rarely starts with a catastrophic mistake. It usually starts with a small feeling. A little irritation, a little impatience, a little need to fix what just happened. And when you detach from that state early, you can interrupt it. You can step away. You can close your charts. You can take a walk. You can stop the emotional reaction before it turns into an expensive one. That's not just discipline. That's self-awareness. And self-awareness is one of the strongest signs that you are becoming more consistent. 3, you stop attaching your identity to one trade. A trader who is emotionally unstable usually gives way too much power to one setup. If the trade wins, they feel brilliant. If the trade loses, they feel worthless. But once you start maturing, that changes. One trade becomes one trade, not the verdict, not a definition, not a measure of your talent, just one data point. Now you start to think in samples: 20 trades, 30 trades, 50 trades, a full week, a full month, a full quarter. That shift matters because it removes emotional pressure from your every decision. You stop needing every trade to be right. You stop panicking over one loss. You stop getting euphoric over one win. And that's where your confidence becomes more stable because it's built on process instead of emotion. You stop jumping from strategy to strategy. This is one of the clear signs that someone is finally getting serious. They stop strategy hopping every time things get uncomfortable. No more changing systems after 2 losses. No more adding random indicators because someone online made it look easy. No more believing that the next method will magically solve everything. Instead, you commit. You pick a model, you study it, you learn when it works, you learn when it doesn't, you learn what looks clean, you learn what looks forced. And that's when real edge begins. Because inconsistency is often not caused from a lack of information, it's caused by a lack of repetition. And repetition is what turns a random trader into a skilled one. So if you finally stopped chasing every new strategy and started truly mastering one approach, that is a very strong sign that your trading is maturing. You plan your trades and you review your behavior. At a certain point, traders realize winging it is not a system. Real improvement starts before the trade and continues after the trade is done. You begin by planning your week. You mark your key levels. You know what conditions matter. You know what invalidates your setup. You know what you're looking for before the entry even happens. That alone separates you from a lot of traders. But the real growth often comes after the trade because now you're just not reviewing profit or loss. You're reviewing your behavior. Were you patient? Did you hesitate? Did you break your rules? Did you move your stop because you got scared? Did you exit too early because you couldn't handle the uncertainty? That kind of review is where real progress happens because the market doesn't just show you what happened, it shows you who you were in that moment. And once you start seeing your patterns clearly, you can finally begin to fix them. You realize that less is actually more. A lot of traders think that more activity means more opportunity, more trades, more screen time, more entries, more money to make. But in reality, more usually means more noise. Every trade costs mental energy. Every decision takes focus. Every open position adds pressure. Every extra setup drains your discipline a little more. And once you overload yourself, your decision making starts to fall apart. And that's why many traders become more consistent when they do less. They stop forcing trades. They stop treating every little move like an opportunity. They stop confusing busyness with productivity. That's a powerful shift because now they understand that the goal is not to trade more. The goal is to trade better. You can wait for the A plus setups. This is one of the biggest signs of maturity in trading. You can sit there and do nothing. That sounds easy from the outside, but in real trading is one of the hardest skills to build because most traders are not losing only from bad entries, they're losing from impatience. They see something moving and want to be a part of it. They feel pressure to act immediately. They think if they're not in a trade, they're missing out. But a more consistent trader learns how to wait. They let price come to them. They let the setup develop. They let the conditions align. And when the setup is not there, they simply pass. That's real discipline. Not just managing a trade correctly, but having the patience to avoid one that doesn't meet your standards. You stop believing that every day has to be a trading day. This mindset saves accounts. A lot of traders get trapped by that identity. They call themselves day traders, so they feel like they need to trade every day. But if they do not trade, they feel lazy. If they do not trade or take action, they feel unproductive. But the market does not care about that pressure. Some days are clean, some days are slow, some days are choppy, some days are random, and some days are simply worth not touching. And a trader who is becoming consistent understands that. They know that being flat is a position too. They know that patience is a part of execution. They know that protecting capital is productive. So instead of forcing trades to feel active, they wait for the right environment. That kind of restraint is a real sign of growth. You know when to stop. This one is deeper than it looks. A trader who is getting more consistent knows when enough is enough. Maybe they've already made their money for the day. Maybe they've caught their best setup already. Maybe they can feel their focus slipping. Maybe emotionally, they're no longer sharp, so they stop. And that might sound simple, but for many traders, this is a battle because greed says to keep going. Ego says you could make more. Fear says you might be missing something. And overconfidence says this will be a good run to continue forever. And that's when traders give it back. A green morning becomes a red afternoon. A strong week turns into a frustrating mess, all because they didn't know when to shut it down. So if you started recognizing that moment and respecting it, that is not weakness, that is professionalism. If you're seeing signs of yourself in some of these, pay attention. You may not be fully where you want to be yet. Your account may not reflect it perfectly yet. The results may feel like they're slower than you hoped, but something is working. Your mindset is improving, your behavior is stabilizing, your process is becoming stronger. And in trading, that always comes before the breakthrough. So keep refining, keep journaling, keep back testing, keep waiting for quality setups, keep protecting your capital and your mind. Because a lot of traders don't fail from a lack of potential. They quit right before that phase where everything starts to click. Don't be one of them.